Hey, it's Rav. Welcome to the Everyday Investor TV show, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us all grow our money. You see, the challenge often is that we take our time, we go to work, and if we have a job, we are blessed. We get a paycheck in order to eat. Let me say that again. We take our time, we go to work, we make money so that we can provide. Now imagine a life where money could make you money so that you could take your time, use it for still working, but you could also spend it with family, friends, engage with into a purpose that's greater than yourself. That's why the Everyday Investor TV show exists. Each week we bring in an everyday investor that teaches us a different strategy. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment? You should already know what you are comfortable with, because if it's too low for you, now you can pass and you can enjoy another conversation talking about the Raptors or the Leafs or the Jays or whatever else you want to do. But always ask, what's the return on investment? Number 2, when do I get that return along with the money that I put in? Because if somebody says return on investment is 20%, but it's over 5 years, then really you're only making 4% annualized. So you want to make sure that you're asking, when do I get that investment? 3, what is the minimum investment amount needed? And 4, very important, you look at them in their beautiful brown, blue, green eyes, and you ask them, what is the risk? What is the downside? If they can't answer that, run really fast. Thank you for watching. Don't go anywhere. We've got a great show. Coming up, Charn teaches us how we can make money investing in pre-construction condos.
The assignment is just the right to sell. The right to sell this piece of paper that I bought 2 or 3 years ago. In this piece of paper that I signed a contract, the builder said, Charn, you're allowed to assign it. And if I'm not allowed, I try to get that in. I talk to my lawyers, go back and put that in.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hi, it's Steve Aho at Canada's Mortgage Choice. As many of you have heard, there are banks and there are brokers. And it's interesting to know that some people still don't know the value that a broker can bring. One thing that's really important to know about brokers is that they have multiple products, as many as 60 to 70 lenders that are available that have at least 4 or 5 of their own products. How does this differ from a bank? Well, a bank has maybe 3 or 4 products that can help, but what happens is you get shoehorned into their products and you are not exposed to the many, many options that do exist that a broker can provide. If you need to know more about this or you're interested in knowing more, please contact Canada's Mortgage Choice. We're here to help.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to Everyday Investor. I'm sitting with my brother, Charn. Charn, thanks so much for being on the show with me.
Very welcome, Rav. Glad to be here.
Yeah, man. Where are you? You look like you're in the Colorado with that behind you there.
No, I'm at my home office today. I stayed home today to work, so I'm actually in the home office. I wish I could be there after tax season.
Nice. Yes, tax season. You are a very successful accountant. We know that, but you're also an investor. And Charn, I've been doing this show now 20 years, believe it or not. We're in our 20th season, and the whole concept's really never changed. You and I are just everyday people that are blessed to be able to work, have wonderful spouses and kids, and we have to be prudent and wise with the money that God's given us. And it's great to see what you're doing. You invest in a lot of different things, but one of the vehicles is in pre-construction condos. And so I want to talk a little bit about that. Why pre-construction condos? I mean, because you've done lots of things. Why do you really enjoy that niche? And do you still enjoy it even in 2023?
It's hard to buy them knowing what I know now, to be honest with you, but it's still meant for some people that don't want to put too much time into managing rentals. So for me, why did I start with pre-con? To be honest with you, I didn't know any better. I had no other option. I was given an opportunity. It was downtown Toronto. I looked at the fundamentals, universities, transit, location. I looked at the TREB stats of the prices in Toronto and said, look, I'm not going to go wrong. So that was honestly the mindset is I cannot go wrong here. I'm not going to lose my money. I've seen a lot of people lose money in other areas, stocks, for example. So I knew my money was going to go into real estate. And pre-con was nice because, as you know, you don't pay up front. You have a payment plan. So it was, I don't want to call it easy, but it was affordable to get in. It was affordable with the payment plans. And then obviously seeing them close and going through this process, it was a no-brainer that this was a very good place to park some capital. So my capital is growing, and in future, it's going to give me some dividends. Or in this case, I can continue to replant seeds that I'm getting from this one small investment that I was easily able to affordably do without changing my lifestyle.
Well, listen, if a lawyer is investing in something or an accountant is investing in something, I pay attention because obviously that's their job. They know the legalities, they know the numbers. And so, I really pay attention when we talk, to what you're doing. You said payment plan. So explain to the viewers, what do you mean by payment plan?
Now, back in 2006 and 2007, the payment plans were $2,000 a month on some properties. So some Toronto condos was like pay $2,000 a month for a number of years. It could be 24, 36, and that's your deposit. Nowadays, what we're seeing, obviously in last 7 or 8 years, the plan's 5% on signing, 5% typically in 30 days or 6 months, another 5% in 12 months or 18 months. So you're typically putting it down around 15%. You can say about a year to about 2 years. And then you wait another year or 2 years until the project is done. High rise is usually 3 to 5 years. You're gonna wait. And then you're putting your last 5% on closing. So that payment plan, that stretching out of when this payment is due, it gives me flexibility and it gives me peace of mind because I know when that cash is going to go out and I'm ready for it, right? In worst case, borrow some from a line of credit, having a game plan to pay that line of credit back.
So basically what you're saying, what I hear you saying is, we know that real estate goes up and down upwards, right? I joke, it's like a yo-yo on an escalator, right? It's gonna go up and down, but it's gonna go upwards. And so you're saying what you love to do is you love to agree to buy a product, a condominium today, but it might not be ready for 3, 4, 5 years. And you need to put down 15, 20%, but even that 15, 20% that you put down, that can be spread over 2, 3 years. That's what you're saying?
That's right.
And unlike a resale, I buy it now, I occupy it now, and if it's an investment property, especially in Ontario, I need to put down 20%. You're saying for you, it's spread out, and there's nothing to do, there's no payments to make, there's no tenants, there's no anything until 3, 4 years, so you've already made some money. And
you just nailed it, Rav. That's the beauty of it. It's like, yes, I want to close. When I sign the dotted line, I'm buying to close. I'm buying this thing as a place where long-term it's going to pay down. It'll eventually start giving me cash flow. Because remember, I'm still working, going to my job. I make a living. I earn income by working, but this is a place to park excess cash for investing purposes, right? Now, what if I have a job loss? That's a risk. That's a huge risk. But there's exits in these things. So I make sure that my contracts say that I have the right to assign. And I know the rules and assignments change and people are worried about them, but you can still structure them in a way that you're not going to get dinged so heavily on personal taxes.
Okay,
right?
so teach me that. Teach me that for a second. Just stop right there.
Perfect.
Let's look at the different exits. What does that mean, assignment? And you make sure when you buy it that the builder, the developer, allows you to assign it if you needed to. So teach me what that means and kind of give me an example with a couple of numbers.
Yeah, for sure. So let's say, so the assignment is just the right to sell. The right to sell this piece of paper that I bought 2 or 3 years ago, in this piece of paper that I signed a contract, the builder said, Charn, you're allowed to assign it. And if I'm not allowed, I try to get that in. I talk to my lawyers, go back and put that in. Sometimes I walk away from the deal because what if things change in the market and I want to get out and I'm not able to, now I'm stuck. So that just gives you the right to sell. That's all this assignment does. Now, if you run through it mathematically, let's say we buy something for $500,000. Majority of people are buying these under their personal name, Rav. Why? It's not because they don't know better. It's just there's a hype on a new project. They're dealing with these platinum realtors, right? So the platinum guys are the ones that get the really good deals. And there's a push like, hey, you got to buy quick. You got to buy quick. And in that hurry, you're not thinking about calling your accountant or lawyers. Unfortunately, you're not calling anybody. If you make that call and you do it in your corporation, and let's say you assignment sold it, you're going to get a better tax rate, right? You sold it. So it's like a flip, right? And the tax man treats you like a builder. They treat you like I'm a builder, even though I didn't get a hammer and nail. I haven't built anything. I just signed a piece of paper, but I'm all of a sudden a builder. Therefore, in a corporation, Rav, the rate's 12.2%. Some clients will pay 26, depending on their tax brackets and what else they got going on. But in general, if the person's a working individual, and this is the first corporation they have, and they bought in the assignment, sold it in their company, 12% tax. HST, add the HST, there's 13% HST payable on the profits as well. Compare that, Rav, to your average personal tax rate for a high income earner, 53%. So that savings is huge, okay? Now, in terms of numbers, buy something for $500,000. So we buy something for $500,000 and we bought this, I don't know, let's say 3 or 4 years ago, we put down 15%. So we put down $75,000. Now we get a call from the agent we bought from. Hey guys, I got a guy that wants to buy your property. I'm like, it's not for sale. It's not for sale, but you know what? Someone's offering you $600,000 or $650,000. Okay, so now I got to sit back and think. I have $75,000 invested. Someone's offering me $100,000 more than I paid for it. So I bought it for $5. I'm going to sell it for $6. Assign it for $6. I more than doubled up my money. I more than doubled up because remember, I only put down $75K. So now I have to make a decision. Do I want to exit? I can exit right there, and that's the beauty. I had no intention of exiting. I didn't know this was going to happen, but I got a call and said, oh, I can make this money and get out and make a profit and double my capital. That's an option. But I also have the right to say, no, I don't accept this price. And I can see this through to the completion and put the 5% close and get the rents. That's an option as well. But that beauty of assigning and getting out within year 2, 3, or 4 before completion, it gives me a little bit of peace of mind and flexibility on that investment.
Yeah.
Right? Doubling up your capital.
Yeah. So no, I love that. But your mindset going into this is not that strategy. Like if somebody is going to buy a pre-construction condo and they want to flip the paper, I know you think that's pretty speculative. Your mindset is I'm prepared to close this and rent it out. And then if I want to take out money, I refinance. If I want to sell, I sell. You're just saying you want to be able to have this option.
The flexibility is beautiful because remember, Rev, when I sign these agreements, the builders want a mortgage pre-approval. So I have to qualify today for something that I'm going to close in who knows when, 4 or 5 years. So my income still has to qualify. And that's what, that's where you want to be careful. You don't want to be signing agreements knowing you can't qualify today because you won't be able to close in the future. And guess what? Now you have risk. Remember you're saying the 4 things? Now you have significant risk.
Yeah. So what you're saying is if you buy something for $500,000 3-4 years ago, a year ago it was worth $650, but today it's only worth $600. You don't mind, you'll still sell it because you still made some margin, or you might even sell it for $575 to give more incentive for somebody to buy it. They're buying it under market value a little bit. Okay, no, I love this. Listen, let's take a quick break. When we come back, I'll throw some numbers here on the screen, and you can kind of look at one of your own personal examples of how we can make a great return on our investment. I'm talking to my good brother, Charn. We're learning how we can make money investing in pre-construction condos. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey, what's going on? This is Kyle here from Kyle Ford Mortgages. on today with my better half, Chelsea. We have a very exciting announcement. You've asked, we've delivered.
We have a really exciting event, so mark your calendars, June 9th to 12th. We have networking, mastermind, some awesome content. We have a pool party, a beach party, a black tie gala. We've got it all, and you can rent your very own cottage or have an awesome room at the Kiwi Motel.
If you're looking for all things real estate, whether it's short-term rentals, long-term rentals, private lending, creative financing, whatever it may be, not only great content, but great people, good times. You absolutely do not want to miss this. Make sure you check out the link.
Hey everybody at Everyday Investor, Costas Cavellos here, First Access Condos. And every week I come and I tell you guys about a project I'm selling, but this week we're gonna be a little different. I'm gonna tell you that this is probably one of the best times in our lifetime to invest in real estate, especially pre-construction. Now, a lot of people have been talking nonsense and they don't know what they're talking about, and they're trying to discourage you, especially the media. Reach out to us at firstaccesscondos.com and let me set the record straight. 5 minutes of your time could change your financial future indefinitely. Thank you.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking to Charn. We're learning how we can make money investing in pre-construction condos. So Charn, you love the deposit structure. You love that there's no headaches until it's ready to go. You love the option to be able to flip the contract. We call that an assignment. Or you close on it, you rent it out, or you close on it, you sell. I mean, you have lots of options. Give me kind of an example of one that's kind of closing soon for you, because I know you have multiple. And then I also want your thoughts on, can we still do this today? Actually, let's answer that question. So here we are in 2023. There's no cash flow. I mean, if I'm going to put 20% down in Metropolis, in Toronto, I'm not gonna, the rent is not gonna cover 80% of my 80% mortgage, taxes, maintenance fees, all that kind of stuff. What are your thoughts on that? Because I know a lot of people that I respect, they don't mind being out of pocket because they know that the appreciation, which I call speculation. And here's my thoughts for you watching at home when I talk about speculation. I have no problem with people speculating as long as you know you're speculating. It's when you don't think you are, but you are, that's where it can be problematic. Charn, what are your thoughts on that when they'll be like, I don't care if I'm out of pocket $400 a month, $5,000 a year, because I know I'm making way more on the appreciation. What's your thoughts, especially being a very smart accountant?
So look, you gotta afford that cash flow loss, okay? You have to realize, can you afford it? Like straight personal finance 101, what's your house budget? Is this gonna put a strain on your family lifestyle? If yes, don't even do it. Like you'll be going down a divorce very quickly if you start doing this. So if you can't afford it, stop right now going to private lending, straight up. You have $100K, go lend it out, cash on cash returns. Now you can afford the 500. Well, let's see what happens. So first of all, we have a $500 loss when this property is rented out. Let's say that's a taxable loss. Well, don't forget, guys, that offsets income, right? That offsets regular employment income. So we actually get a tax refund, but let's take that part out of it. Let's just say straight up $6,000 loss per year cash flow. Let's say we operate like that for 5 years, Rav. We're at $30,000 that we were negative, out of pocket. But look, I use myself as the example. All these pre-cons, all the condos I bought, I've yet to see any one on closing being worth more than $100,000 when I bought it. So that's the minimum. I've seen some go 250, 300K. Those buy 5 years, that's the value. But let's say, how about the ones that I closed on and kept them for many, many years? They give you cash flow now, but how about the value? What did I pay for them? Like, Rev, some of them were such low cost bases, like 300s, low 300s in downtown. They're worth 700 now, okay? 4 or 5, that's $400,000. So if I had to go 5 years of negative cash flow that brought me $30,000 out of my pocket, but I survived because I could afford that, I just made $400K minus 30. I'm still ahead $370,000. So you're still ahead if I was to sell that property.
So, and I did say I'm going to write it on the board, but I just have too many questions because it's a very exciting vehicle. People are watching right now and they're saying, okay, Charn, I get it. But here we are in 2023. I can't necessarily afford 30 grand over 4 or 5 years. I do want $100, $200 worth of cash flow. Is it out of the question now in this great nation of ours, or you just have to pick a different place? Like, what would you do now? Like, are you still in the market of buying pre-cons?
Buddy, that's exactly what. So I left the Toronto market when I started seeing like 11, 12, 14, $1,500 a square foot, 1,700. I looked at it, just didn't make sense. So I started looking at other markets. I looked at Mississauga, I looked at Oakville, I looked at Kitchener-Waterloo, Guelph, Whitby. I started looking at all these Vaughan. What are things selling at a price per square foot? And the variances were significant, huge variances from like what Mississauga was selling for relative to Toronto, or Oakville relative to Toronto, Whitby, etc. So I ended up looking at some projects in Oakville and I ended up buying them, and they turned out really well because the price per square foot was so cheap and the location was so prime. That was right by the GO station. And I've exited that, and that turned out really well. And then Kitchener-Waterloo. These things were selling like, I think it was like 300 a square foot. Honestly, I look at some of these purchase prices from like 2018. I don't even understand them. At that point, remember, things were expensive. You spoke to someone in 2018 and I told them, hey, I'm buying this. Do you want to also, buy one? Do you want to go check it out? That's expensive for KW. But once again, why was I looking at Kitchener-Waterloo? I looked at the price per square foot, and I went to school down there as well. So I knew the market a little bit better than just walking into KW. Google is there. They were working on the LRT, the GO station line. All of this stuff was happening down there. And this was going to happen in 4 years. 18 I bought. That is all there now. You go there, it's a totally different market. And these prices have taken up. So there's still opportunities, but you maybe have to look outside of the Toronto core. That's all it is, right? Okay. You got to look outside of Toronto.
Yeah, I'm invested in a development in Durham, right? Where we're actually in the development part, but somebody's going to buy pre-construction condos, and I think it's great, the marina there, Whitby, the harbor, all that kind of stuff. So basically, somebody, let's say...
I'll give you an example. Let's put a number on the 420. Just put 420 down.
Okay.
420K. This is, you're saying, there's a closing that's going to happen soon, right? So this thing was 420,000, purchased in 2018, 15% down. So 63K has been invested. 63K has been down. We just picked up the keys up in January. It's a 2-bedroom, 2-washroom with a parking spot in Kitchener, right across the Google offices. So a lot of the tech guys want to rent these things. At the peak, so this, once again, you got to get into phase one. Just want to let people know, phase one, try to get in phase one. Obviously, a little bit more is early. And if you go to a reputable builder, phase one, you're going to make good money on the first phase. So we were in on phase one here, Rav. I saw phase two pricing come out sometimes late last year. I think it was fall. And I was shocked. And I didn't understand the pricing. The similar unit, $725,000. Similar unit, Rav. Yeah, exactly, right? So I'm sitting back and saying, I can't pay this. I would never pay $725 for this thing. But people are still buying it. The market's changed. Remember, the LRT's there. The Google's there. Google expanded their offices. So the stuff that was going to happen in 18 has now taken place. The LRT is functioning. So the values now are higher. So $725 is not, I don't think anybody would pay that. So let's just say $650. Well, fine, $650. That's still a pretty significant increase from the buy. Remember the 420, 63K down? If I was to get rid of it at 650, simple math, no commissions, nothing else, that's around 230K buffer that I made with the 63K investment if I wanted to exit. Yeah. This one has an assignment clause, but we're gonna close on it and wait through it and just keep this one.
Yeah. No, it's great, man. It's great. But let's say we're going in today, and again, let's say there's a purchase price way out in Durham area or up in Aurelia area or wherever the case, along the Niagara corridor, or let's just say this. And so 20% of this is 120K, but you're saying that's over what, 2 to 3 years maybe, or
Just say 2 years. Say 2 years.
Okay, so this is over 2 years.
But even then, hold on. Just take 15%, Rav. I would say take 15 because that 20 is like at the end in year 4. The last 5, we're paying that all the way at the end.
Okay, so even better. But if I give myself the increase on this, what's a very conservative increase? Can I use 3%?
That's very low. That's, I think, too conservative person. That's way like
okay.
You can use
but I like it.
You can use 6. I think so. Let's say 600,000 times 0.03. 18,000. Let's say over 4 years.
Well, let's just say
Gets to
so
72.
Yeah, over 4 years.
Yeah, 18. Let's just say 18K a year. Simple math. 600,000 at 3%. 18,000 4 years. That's 72K. So we should expect it to be 672 just based on inflation, just based on typical real estate increases on inflationary increases over, as you were saying, over that long period. 3%. That's 72K. So 4 years. It has to be 672. Like it will sell for 672, just as is the way it is because of market.
But I didn't have to do anything, and it's a little bit more because it's compounding, right? Like the first year it's worth 618.
Exactly.
So compounding, so it's worth almost $100,000. And you're saying, Rav, you don't even like that I'm putting this up here because you're saying this is ridiculous. It's a lot more than that. And by the way, if you're watching, you're seeing prices come down, but not really in the condo market for whatever reasons. There's big demand.
Still affordability. That's why.
Affordability, people
right?
coming in here. But this is why you kind of like it because of leverage. I mean, you told me to put down 15%. So really, this is 90K. 90K over a couple of years. And even at this ridiculous example, I'm making over 100K over 4 years. So I'm making 25% north on my money, annualized, right? But you're saying, yeah, but Rav, this is not correct because we've been making a lot more. But this is why you like this strategy, investing in pre-construction condos. So we look at kind of what the returns, very healthy returns. We look at when you get it. Well, you shared a couple of exits. You can assign it, you can sell it when it closes, or you just hold it, and now you're making money on appreciation. Somebody paying down your mortgage, which is the biggest part of it. And then there might be cash flow, there might not be, but we're doing this again for someone to pay down the mortgage and it increases in value. Minimum you need 15-20%. And then you mentioned the risk. What other risks or downside would there be that you would advise your nephew, Charn, if he were to invest? You said try to get into phase 1, make sure it's a reputable builder, right? We didn't talk about the builder, but does that matter to you?
It's so important, Rav. It's very, very important. I got suckered into one by the GO station. Not suckered into it. I love the location. It's townhouses in Mississauga that are not being built close to the GO station line, walking distance. It was a no-brainer, but the builder, they weren't the best builders. So I moved in when I got the unit, did my PDI inspection, walking through it. I was not happy. And I talked to other people. So the quality of the build was very poor. The reputation of the builder, knowing what I know now, if I did more due diligence, I probably would not have bought that. Even though the location was good, even though it went up in value, just that quality of the build, I'm not happy with it. Whereas like, there's other like Tridel. I don't want to start naming all the builders here, but like there's builders that have a good quality product that they build out and their customer service line as well. And they help you through all this. And I think that's very important because later on, when you go to resell this and your building is giving you problems, that's going to reflect in the selling price.
Yeah. Listen, Charn, really, really appreciate you being on the show. People are watching it. If they want to get a hold of you to get some advice, do you mind if they contact you?
Yeah, definitely. Just go straight to my website, Rav, charnhansra.ca, submit a meeting request there, and definitely I'll help people out.
Well, listen, I really appreciate you, and thank you so much for being on the show with me.
Thank you, Rav, for having me.
Yeah. And thank you guys for watching. Without you, we would not have a show. Remember, it's almost like on demand. Go to everydayinvestor.com. You can watch this episode or any others by logging in there. Please subscribe also to our YouTube channel. It would mean a lot to me. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon. Bye, everyone. God bless.